Good afternoon, everyone, depending on where you're joining us from, and welcome to today's webinar. My name is Stefan from Business Review, and I'll be your host today. It is our pleasure to have EIT InnoEnergy with us today, who will be presenting this webinar titled Decarbonise Hard-to-Abate Industry with Green Hydrogen. Today's guest speakers are Karina Crestel, Commercial Director from EIT InnoEnergy's European Green Hydrogen Acceleration Center, and Simone Acurniro, Energy Leader and CEO of FlexiDAO, one of Europe's most promising startups, working on the certification of green energy and hydrogen. Before we start, I would like to highlight that at the end of this webinar, we will be presenting a discount code for EIT InnoEnergy's flagship event, the Business Booster. Taking place in November, this annual event will enable you to not only meet today's guest speakers, but also discover 150 other sustainable energy innovations which cover the full spectrum of the energy transition. I will now wrap up with a couple of practical points. I would like to welcome you to our webinar platform On24. You will notice that this webinar is browser-based. If you disconnect for any reason, please just click on the link you received via email to rejoin the session. In order to ask questions, you can do so via the Q&A widget on the top right-hand side of your screens. Just type your question into the box and click Submit. We will allocate some time at the end of the session to address any questions or thoughts that you may have. Please use the yellow Help widget if you require any assistance, and keep in mind you can move, resize, and maximize any of the windows in front of you for a better view of the slides. But for now, please allow me to hand over to the first speaker. Karine, over to you.
Thank you, Stefan, for this great introduction. And welcome everybody to our webinar on decarbonizing hard-to-abate industries with green hydrogen, talking about the European Green Hydrogen Acceleration Center and highlighting certification of hydrogen with FlexiDAO. I'm really excited to guide you through this, and don't hesitate to post any questions that you have during the chat. We'll answer them during our Q&A sessions at the end of this webinar. What is our agenda today? We'll start off with giving you a little bit of background on what is green hydrogen and what is the role in industrial decarbonization. I'll guide you through what we're doing at EIT InnoEnergy at the European Green Hydrogen Acceleration Center and how we work and how we accelerate hydrogen projects. And then, as I said, Simone will take a look at FlexiDAO's green hydrogen certification solution. Who we are. So first, to start off with and give you an idea of who we are, who EIT InnoEnergy is. EIT InnoEnergy is a public-private partnership, and we are today to a majority still funded by the European Commission. We have been initiated approximately 11 years ago as a call for tenders by the European Commission, which is aiming to develop, let's say, an organization that is pushing innovations in the energy sector in Europe. And that is also the mandate that we have, is to overall to reduce risks and time to market of energy innovations in Europe. And here you see a list of all the different objectives that we have that are linked to this overall objective, which is, for example, ensuring energy security and safety of supply, which is crucial, but also reducing, for example, CO2 emissions and decarbonizing our overall energy system. Those are more from the environmental side, but we also have other objectives such as, for example, economic growth and job creation. And we do that through a variety of activities that you see listed here. We have four main activities, the first of which is education. And we run several sustainable energy master degree programs across Europe. They're usually multicultural and multi-country based master degree programs with the goal to develop the innovators of tomorrow. And I think Simone here is a really good example of that. And then our second activity is business creation, where we invest in early stage startups and scale-ups, where we're talking really early participation in startups and have to really develop the business case, develop their go-to-market strategy, etc. And I'll tell you a little bit in a second about the numbers we actually currently already have, so 10 years of our existence. Our third activity is we invest in product development. So if we have, for example, a consortium of companies that are present in different European countries, we help them develop their products and thus invest also a bit more money because this goes more into scale up. And then last but not least, we have our fourth activity that has been started 4 years ago, which is to set up industrial value chains. And we have done so already in the European battery space. We've created the European Battery Alliance, where our goal was really to bring back the battery value chain to Europe and really produce sustainable batteries in Europe to also create value here, to create jobs here. And this has been set up 4 years ago and was really successful. The second one is the European Green Hydrogen Acceleration Center that I'll talk to you about today, which has been set up last year, and the European Solar Initiative. And all those, let's say, industrial value chain initiatives have the goal to re-establish or establish a value chain in Europe and create value here and jobs. And so to tell you a little bit about the numbers of EIT InnoEnergy, so we're present in several European countries. We have 230 employees today. We've invested approximately 560 million euro with our existence. We have 1,200 students that have passed through our master degree programs, have 330 startups and scale-ups today in our portfolio. And I'm not going to go through all the numbers, but you see we have really a wide ecosystem, and since our existence have really created value in the European market to push innovation in the energy sector. And to show off a little bit, we're also one of the top investors in renewable energy tech in the world, actually, right after Shell Venture. So you see we are quite big, we have quite some impact, and we're really proud about that. And so now that you know a little bit and can situate who EIT InnoEnergy is, we would like to talk to you about decarbonization of industry and the role of green hydrogen, which is my special area, and also Simone, who will talk about it later on. So first, to kind of lay off the land a little bit. The question is to give you some background on green hydrogen and why green hydrogen is actually important in industry and in the decarbonization of industry. So as probably a lot of you are already aware of, is that we have really ambitious targets in the EU now from the political side to decarbonize our economy. And therefore, the European Commission has now decided that the European Union will be one of the first continents to become climate neutral, or the first continent to become climate neutral by 2050. And this is really a huge challenge. We can say so, because this really means we have to transform our energy system totally. Today, our energy system is fossil-based, and we need to turn that into it being renewable-based and also more circular. And in order to do so, hydrogen is actually a key enabler to do so. And I'll tell you later on why that is the case. But just to kind of look at what the European Green Deal is aiming to do is, as I said, we want to be climate neutral by 2050. We want to stimulate economic growth and decouple that from resource use, which is really also quite crucial in order to have a more circular economy and in order to make sure that we're not exploiting the resources we're using, which is in the long term surely not sustainable. And the third aspect, which is really also part, let's say, of the sustainability approach of it and the social aspect of this green transition, is no person and no place left behind. So really a social energy transition that creates jobs and it creates really a growth that we can rely on. And in order to do so, the European Commission has now, let's say, dedicated 1/3 of a 1.8 trillion euro investments towards that. And that comes from several different funds, for example, the Next Generation EU Fund, or also the Recovery Fund, amongst others. But in total, it's 1/3 of 1.8 trillion euros, which is really significant. And let's say this is the overall vision. And from there, we're now thinking about, okay, how can we move towards that? What do we need in terms of regulation? And there is this very famous, let's say, Fit for 55 package, which came out in July. So this year, huge policy ambition to help us reach the climate neutrality goal, but also have an intermediate goal of 55% reduction by 2030 of greenhouse gas emissions. So that's really also ambitious, has been increased, the target has been increased from the initial target. And in order to do so, hydrogen plays a role of that. So you see how kind of the policy framework is structured. And now I'd like to talk to you about hydrogen. So hydrogen, as I said, is a key enabler to drive those emission reductions. And let's say key areas where this is important is actually in industry and in transport. And in the hydrogen strategy that has been developed by the European Commission, hydrogen is seen, number one, as a fuel of tomorrow, replacing natural gas, but also as a feedstock. Hydrogen is already mainly used as a feedstock today, but here the goal is to replace that with renewable hydrogen. Today it's mainly fossil, 99% is fossil hydrogen that is being used, and also to use hydrogen as an energy carrier. And that means that today we use fossil fuels, which is a natural energy carrier, but tomorrow we might use hydrogen to as an energy carrier, meaning it will be produced at one point and it will be consumed at another point. And why is hydrogen important? Hydrogen is actually an enabler of sector coupling. And some of you might have heard this term. It just means that we'll electrify a lot of things in the energy transition because we have to get away from fossil fuels. So we need to have another kind of source of electricity, of energy, and that will be mainly electricity. But in some cases, this cannot be done because we have, let's say, storage issues, etc. And hydrogen can be the molecule that can replace, let's say, the existing fossil molecules and couple the sectors of electricity and heat, for example. And as I said, also, hydrogen will be mainly interesting for the sectors where it's already being used as industry, but also for transport. So we'll see a lot of, for example, hydrogen trucks that will get on the roads soon or are already running on the roads. And we will see a lot of, let's say, industrial transformation where renewable and green hydrogen will be used, or decarbonized hydrogen. And the hydrogen strategy also looks at creating, like, let's say, new economies of jobs around hydrogen, because this is really, let's say, we hear all the time that Europe is really at the forefront of it, and we can therefore make sure that we create an economy around it. And so just to give you a few targets here, the industry sector will be 50%. We'll replace fossil hydrogen with renewable hydrogen. And for the target in transport, we have a 2.6 target. So why do we focus at InnoEnergy on green hydrogen? I think that's really clear here. You see the different colors of hydrogen, and we talk a lot about different shades. There's all types of colors. Mainly people talk about blue, which means that we capture the CO2 produced from a natural gas plant and we sequestrate it under the earth. Or sequestration sinks, let's say. This is the main one that people talk about, but we really want to focus on green hydrogen because we believe we should focus on the new fossil-free economy, create jobs here, phase out fossil fuels rapidly, and also therefore accelerate the deployment of renewables, since hydrogen or renewable hydrogen will need a lot of renewables. And now I'd like to talk to you about the EGHAC, so the European Green Hydrogen Acceleration Center. Now that you have a little bit of background of what, let's say, why hydrogen is important in industry and why it's a key vector to do so, I would like to talk to you about how we actually get it onto the market and how we at the European Green Hydrogen Acceleration Center, EGHAC in short, can help to do so. So number one, we capitalize on what we've learned from the Battery Alliance. So what we've done in building industrial value chains in the Battery Alliance, which was really successful. And so we're not starting from zero. But what is important, we're not a political initiative. We are really an industry-led initiative, and we want to build business cases at the European Green Hydrogen Acceleration Center that are led for industry and that can be in the money. What we are aiming to do overall at the EGHAC is we aim to accelerate and de-risk green hydrogen projects. That sounds quite vague, you could say, but today what you see in the market is that there's a lot of announcements that are happening, but today green hydrogen, renewable hydrogen is often not really in the money, so it is not financially feasible. And we want to help those projects through this value chain approach that I'll talk to you a little bit on how to get in the money. And we follow different value chains where hydrogen can be interesting. So it can be steel, chemicals, mobility, and fertilizers. And there you will see in a bit that this relates also to the end markets. So for steel, for example, this is automotive, the automotive industry, where steel is actually being used. For fertilizers is, for example, the food industry. And what is really important, we're really end customer driven and off-taker driven. And I'll explain to you a little bit why this is important in order to get those projects off the ground and really accelerate them and make them happen. So when we look at the example of steel, what you today have in the market is steel is being produced with coal. So it's really highly emitting, and you have like the normal blast furnace technology, etc. And what usually happens is you produce steel and you directly emit CO2. If you want to decarbonize the steel making process, what you can do is you can use green hydrogen to do so. And if you want to do that, you need really big volumes of green hydrogen to do so. You inject that into a direct reduction furnace, which then produces steel that is almost at zero emissions. So on paper, a really interesting idea. But the problem that we see in the market, and that is clearly now, I think, really visible, is in the traditional value chain model that exists today, where you have, let's say, actors that are at their spot in the value chain from A to B to C to D, they only look at their own, let's say, value creation and the risk that relies on that. And if you, therefore, want to produce green steel, you have a margin that is being passed on from one player to the next one, because they all price in a risk that is linked to, for example, a new technology, increased cost, etc. And in the end, you end up with steel that is, okay, green, but it is a lot more expensive because every actor in the value chain has added on their margin and the risks that they're pricing in. And so what we see is that you have in existing steel players that are talking to their customers, but they're saying, no, I'm not willing to pay for the steel. It's too expensive. I'm not willing to pay for that premium. I am not paying the decarbonization of your own plant. And therefore, what we see is if we continue to push that traditional model, the only way to get green hydrogen projects off the ground is if we do it through subsidies. So therefore, that's what you see today on the market. A lot of hydrogen projects are being announced, and they all rely on subsidies because they are not closing the loop to the end customer, and they're not following what we call, let's say, innovative value chain approach, where you create a pool and you bring all the different actors into one boat. And this is exactly what we are pushing, and this is what we call the innovative value chain approach, where you now all of a sudden say, our objective is to produce green steel. Who do we need to produce green steel? You have different actors in the value chain. You bring them together and you create a business case jointly together with all the actors where risks but also benefits are jointly shared. And that you do in having them jointly invest in a project. And if you do that, you generate, let's say, the optimal premium that then the end customer, who is actually taking the demand, so in the case of steel, this would be a car manufacturer, is benefiting from optimal premium and then also willing to pay the optimal premium. And if you follow that approach, what you find is that for a car, for example, you can reduce the CO2 emissions of the production emissions of a car by 1/3 when you use green steel. So that's really significant. And it will cost you only €100 more. And this is really, if you believe like you're a private person, you can buy, let's say, a car. If you buy a car for €30,000, buying it 1/3 decarbonized in the production side costs you under €100 more. And so we were wondering, why is this not happening? Why is this not happening more? And why can we not push decarbonization like this in bringing together all the actors of the value chain? And that is exactly where, let's say, where the European Green Hydrogen Acceleration Center starts. What we do is we help facilitate project holders of green hydrogen projects to identify the right parties that are needed for the value chain, bring them together, make them work together, and try to build jointly a common business case that can then be financed and where you can actually get financing from the market. Because you actually include the off-taker in the scope, and therefore you have a demand covered. And so if we now look at other examples, so I've just told you about the steel example and a car, yeah? So here you saw that it's approximately 30–40% of CO2 emissions and a really low premium. But there are also other products that we've looked at. And here in blue, you see the ones that are linked to steel, and in green, you see the ones that are linked to food, where you can, if you do the same approach, you can actually have relatively low premiums for relatively high carbon emission reductions. And what we're now doing is we're discussing with a lot of different project holders to see how can we involve that kind of thinking into their development processes. And to give you an example on actually, this seems like theory, but it's actually not, because we've already shown that this works, this approach, through one of our flagship projects, which is H2 Green Steel, which is a greenfield steel plant in the north of Sweden. 5 million tons of green steel, so a new plant being built in Europe. So jobs creation in Europe, value creation in Europe, and totally green, 100% sustainable. And this has been really following the value chain approach, involving the end customers in the development process, such as, for example, a truck manufacturer and a car manufacturer. And therefore, we could build a business case that is actually in the money today and that can be financed on the market and will be realized. And this startup, or let's say this venture, has already closed their first financing round, and they wanted to raise 50 million. They've raised 105 million. So it's a really successful case and venture. So this proves that this approach works in the market. And so if you have, for example, a hydrogen project or want to learn more about this, we have set up the investment platform, which actually is a tool to facilitate those exchanges and help to shorten time to market and reduce risks. And so please reach out to me or to my colleagues to talk about this, see how we can help you to accelerate your project and create these bankable business cases. And what I would like to just highlight, I think Stephanie also said it already, if you just want to learn more about hydrogen and also be part of, let's say, the sustainable energy ecosystem in Europe, you can join us at the Business Booster event, which will be held from the 3rd to the 4th of November in Berlin. And as Stefan said, we have a special discount for the participants of this webinar to join us in this discussion. And you see the code is here. So we're really happy to host you there. And we have a special, let's say, parallel session only on hydrogen, where you can meet me, you can meet Simone, and you can meet our team, discuss about hydrogen, learn more, and be part of that ecosystem. So please reach out and join us. And now I would like to hand over to Simone. Simone is the CEO of FlexiDAO, as Stefan already introduced. And Simone, you will talk to us about certification and give us an insight on how hydrogen certification is important in order for its deployment.
Hi, thanks a lot, Karina. And yeah, so as Karina said, I'm Simone and I'm the CEO of FlexiDAO. FlexiDAO is a software startup, so we are a software solution provider. It's also advisory providers for corporates that want to decarbonize their electricity consumption mainly. Then I will explain how this is linked to hydrogen, but Karina already explained about sector coupling. So first of all, to make you understand better what we do at FlexiDAO and how this is linked to hydrogen, let me first give you a sneak peek into what we do and why we do it. So we work mainly with large corporates that now have a lot of pressure to decarbonize their electricity consumption. Corporates, historically, in the last 4 decades, have been starting to offset their CO2 emissions or to buy renewable energy. Historically, how this has happened has evolved a lot with a growing focus on impact and real decarbonization of how companies consume electricity and renewable energy. Initially, they were just buying offsets or they were just buying certificates. And effectively, what this means is that you're just offsetting or at the end of the year, the emissions that you actually had. And then as the market matured, they actually started to procure or through investment, add more renewable energy into the grid. They're called called PPAs or on-site renewables, etc. What this does is actually a reduction of the emissions, but still the way that this is accounted for is over the year. So I look at what I consume over the year, and then I balance it out buying certificates or buying volume of energy on a monthly or yearly volumes. And so this is, although definitely a very good development and a very good way of buying renewable energy, now there's a third wave that is coming out that is, no, every time I consume, I must ensure that there's some renewable energy that is procuring and that volume can be allocated to me. Which does not necessarily mean that it can physically flow to me, but it can be demonstrated in the same grid area and it's producing at the same time. And this, of course, is because renewable energy is extremely volatile. So if you want to make zero carbon-free claims, which are then very important for green hydrogen, you want to make sure that if you are using the electrolyzer, you're not causing the turn on of a coal power plant or a gas power plant. You want to be fostering renewable energy, not the other way around. That's why the concept of time and geographical correlation between renewable energy production and green hydrogen creation is extremely important. And this is essentially what we do at FlexiDAO. We certify and we demonstrate the match between the production and the consumption of renewable energy. And that this happens with a given temporal and geographical correlation, and that the claims that corporates can do on this in terms of emission reductions or hydrogen production can be transparent and are supported by real data that is collected by the meters that are deployed around Europe. So this leads us back to my first point. We, a company, we take corporates along all the journey that we showed before. We enter after the offset, we help them better more insights on how they're reducing their emissions, and then we help them transition towards 24/7 renewable carbon-free energy. So being carbon-free every hour of the day, every day of the year, through software tools that also can digitize the advisory needed to achieve these goals. Here, just quickly, a few flagship services and projects that we have been developing. So the first one is with Microsoft. So one of the main off-takers of the concept of 24 carbon-free energy are data centers. In the Netherlands, we are already using our platform to certify that the consumption of Microsoft data centers actually come from Dutch offshore wind that is produced in real time to the data center consumption. Similarly, with another company, Vodafone, we help them understand the exact origin of all the electricity that they procure through their energy suppliers, and the exact origins, as I said, and what plants are they actually buying the certificate from, or monitor all the PPAs that they have, the supply contracts that they have. This helps them to have a more clear and transparent reporting towards investors, but also help them to understand better the carbon footprint with the idea of course, improving it. And then last but not least, and what then is the link to today's discussion, is a project that we're doing here in Spain. This project is already live and in the pilot part, because the electrolyzer is currently being built. As soon as we'll be receiving the data, we'll start certifying the outcome of the electrolyzer. It's a project with Axiona. that involves actually a much larger consortium, also with the supply chain approach that Karina was mentioning before. But then the question is, why is hourly certification of renewable energy so important for green hydrogen? Well, this is essentially linked to one of the things that Karina touched upon before. So there are many articles coming out recently with the hype around hydrogen that are showing that blue hydrogen is not the way forward. And actually any other type of hydrogen should not be the goal. The goal is to work with green hydrogen, but even more importantly is to make sure that this green hydrogen creates a positive additionality into the renewable energy grid. Additionality means that it fosters the installation and the construction of new renewable energy plants and does not cause the injection or the call into action of what they're so-called marginal plants, so gas-powered or coal-powered power plants that are located in Europe. And this is clear, that this is important. It's actually clear from what the European Union has been saying. So the recital 90 of RED 2 that for transport, for renewable fuels of non-biological origins already says clearly that temporal and geographical correlation are key factors for such fuels to be claimed as to have the renewable label. The Innovation Fund has put forward even more strict requirements when it comes to additionality through PPAs and 15-minute matching. And more, it's becoming clear that the position of the European Commission is to have a system that can really certify and prove that the hydrogen was generated with renewable energy that could actually flow, that could actually be delivered to the electrolyzer. Of course, assuming that the renewable energy plant is not directly connected to the electrolyzer, but it flows through the electrical grid. And the main issue here, and one of the reasons why we are entering this market, it's because right now, today, the European Union does not have an electricity certification system that can go down to hourly granularity. It simply does not exist. So it means that there's no such a system, and this system needs to be created, and on top of that, a lot of burden will be put on the producers that have to go through from having to manage monthly or yearly guarantees of origin. So all the procurement teams have been used to doing just monthly or yearly accounting of renewable energy through green certificates. And now suddenly they have to do 15 minutes. So that same balancing they used to do for the year, now they have to do it every 15 minutes. So of course, this adds a lot of complexity without saying that the system is not in place yet. So what we're doing as FlexiDAO is, first of all, that we have a software. It's basically, you can see it as a power to hydrogen control room. It's the same software with a few adaptations that we are developing for Axiona that we have been using for corporates for the last 4 years, and how we are certifying the data center of Microsoft, the consumption of Vodafone, etc. So we collect guarantees of origin because that's what the law imposes. But on top of the guarantees of origin, we collect granular data from the actual devices. And we link the two things. So we allow consumers to actually certify with maximum transparency, 15-minute matching, hourly matching, whatever type of granularity is needed, that the electricity consumption of the electrolyzer and therefore the output hydrogen, including all the processes in the middle to get the right quality that is requested by certified or similar organizations, that all of these steps only and exclusively consume renewable energy that is produced in real time. And that it's extremely easy for the producer. Everything is fully automated, fully auditable, and all the data is available to actually demonstrate that this hydrogen met all the requirements. So here is just a few sneak peek of the platform that, as I said, it's already running on dummy data. We track all the consumption, the production. It can come from many different sources. We can include many different production assets on-site or off-site, and different electrolyzers all in one dashboard. And also, of course, all the CO2 emissions of the grid and to demonstrate the avoidance that is being achieved. On top of this, something that we're also working on is, of course, to also look at sectors that have hydrogen as byproducts, and that by simply starting to buy a PPA or renewable energy from a utility or from an energy provider, they can also start delivering more value through this byproduct. So here, really, our platform is being used as a proof, as a tracking tool that companies are adding to any public subsidy application, to any project that is about to go live, but also, in this case, to existing industrial processes that are trying to make the transition towards green hydrogen with the byproduct of existing processes. So here I'll stop. As I said, as Karina said, we'll also be present at TBB. As I said, our focus is not exclusively hydrogen. Actually, that's one element of the things that we do. We work with electricity and everything that consumes electricity. So with electrification will be more and more important for the market, because we want electrification to drive the adoption of renewable energy and not the other way around. So again, if you're a corporate or if you're an investor, we're more than happy to meet you in Berlin, if it would be physical, at TBB, and we can have a longer chat there. Thanks a lot.
Thank you very much, Simone and Karina. It is now time for the Q&A session. If you'd like to ask your questions, you can do so via the Q&A widget on the top right-hand side of your screens, but it looks like we have some questions coming in already. Our first question for today is, how do you deal with competition law compliance when you build these hydrogen partnerships in industry? A lot of commercially sensitive information is potentially exchanged between competitors and or partners in the supply chain.
Yeah, so I'll take that. Thank you, Stefan, and thank you for this question. Yeah, so this is a really, really good question and an important one, and also difficult to handle, to be really honest, because I think in general, you have to find the companies that are willing to do that. Yeah, because I think what we've seen so far, it's not easy, and it doesn't work with every company, because there has to be a willingness in order to, give up a little bit of potentially existing business, of existing ways of doing business, and innovate, do something new, and therefore also be a bit more, let's say, on the edge of what you would usually do. And what we see when talking to players, not all of them are willing to do that, and not all of them are willing to share their information. And therefore, we are looking for those the willing, the consortium of the willing, we always call that. And there are companies out there that are really the leaders in the field and that are willing to do that because they either challenge the market and want to stay at the forefront, or they're really newcomers that want to be, like, let's say, a disruptor of the market, and therefore, are also willing to go a step further. But it's a really, really good point and a really good question. But in order to push those innovations, you need to, disrupt the existing system, else it won't work. Else we will go too slow and we will be too reliant on subsidies, and that will cost us, let's say, as the citizens of the EU, too much money. And therefore, we are there to try to find the challenges and build together with them the solutions that work today already, like Eco Green Steel, the steel project I talked to you about, that then disrupts the market and creates those fractions and the disruptions. I hope that answered the question.
Thank you very much for that answer, Karina. And moving on to the next question for today. Could you please elaborate a little on the issue of efficiency that comes with using hydrogen as an electric source? As the electrolysis process, for example, is around 75% energy efficient, so around 1/4 of the electricity is automatically lost.
Yeah, so that is also an interesting question, but I think it really depends on what we're looking at. So what we always say is our goal is first to electrify what can be electrified in order to not have this efficiency loss, because it's clear if you can do the same thing with either electricity directly or hydrogen, you will always be less efficient when you use hydrogen because you have just one more transformation process, and therefore you lose efficiency. So fully clear, for us, it's important to say we first electrify what we can electrify. So I can give you an example, passenger vehicles, for example. Initially, let's say the hydrogen economy has started around passenger vehicles because there's been let's say it's very tangible, it's a B2C market, and therefore there's been a lot of buzz around passenger vehicles using hydrogen. Now what we see that this is less and less the case because it can be done through batteries, and it can be actually far easier electrified, and also from, let's say, an infrastructure perspective, you can far easier build, let's say, an electricity supply or a plug at a station than doing that with hydrogen. And therefore, in the passenger vehicle space, it's more efficient to do that with electricity and should most likely be done with electricity. However, when you look, for example, at heavy good vehicles, so especially those, let's say the trucks, there's the term for trucks, that go from above 300 kilometers, for example, then there is a trade-off to be made between whether you use an electric truck or a hydrogen truck because of the energy density that can be actually carried on the truck itself. So there is applications where really hydrogen makes a lot of sense because you cannot do it electrically because the batteries will be too big. You cannot store electricity that long. And therefore, all those applications where you cannot electrify it, the best solution is green hydrogen because it is a molecule, like I said before, it's an energy vector that can be stored, like you have, with, let's say, with natural gas, because electricity, to store big quantities of electricity is really complicated. Yeah, and then last but not least, there's also, let's say, only applications that actually do need hydrogen. So, for example, when we look at the industrial space where hydrogen is already used today and where it's mainly fossil, you need hydrogen as a feedstock. So, for example, to produce fertilizers, you will need hydrogen as a feedstock. So there you cannot electrify that because you actually need it as a feedstock in the molecule itself. So there you also have no choice and you have to accept the efficiency loss. I hope I explained the question.
Thank you very much for that answer. And moving on to the next question for today. Does the EGHAC or EIT have corporate members?
Yeah, so actually these are two questions in one. So the EGHAC, we have, let's say, members, but we don't have a membership in that sense. Yeah. We're really an open ecosystem platform, and you can just adhere to the EGHAC. You go on our website, you sign up, and you're part of it. You receive newsletters, and you're part of our ecosystem. So there is no membership, and we have a lot of, let's say, corporate, but also NGOs. We have universities, we have startups, we have, let's say, a lot of different players that are all part of our ecosystem. There is no membership place here, but yes, EIT InnoEnergy. We have actually, as I said earlier, we are public-private partnership. So we have corporate members that are actually our shareholders. But we also have, let's say, a membership approach where you can have different, let's say, forms of membership, premium, gold, etc., where corporate companies can really have, let's say, a more described relationship with InnoEnergy and be really a strong partner of our ecosystem. Yeah, so we do.
Thank you very much for that answer. And just a quick reminder to the attendees, if you'd like to ask your questions, you can still do so via the Q&A widget. But moving on to the next one, which is for Simone. How does your geographical expansion plan look like for the next years? Any specific regions/countries?
Yes, thanks a lot. I see it comes from a VC. Yeah, so right now, the 24/7 market is still quite niche, both when it comes to the hydrogen, but also when it comes to electricity consumption. So we are targeting multinational companies that are very sophisticated in their procurement. So companies like Microsoft, like Vodafone, etc. And therefore, our geographical expansion is linked to these customers. Once we sign an account, we move where they move. So for example, with Axiona, we started in Spain, and now we're in Spain, Portugal, Mexico, and Chile. So we currently operate in 13 countries. More related to hydrogen, right now the place to be is in Europe. So also with other corporate industrial players that are interested into hydrogen, of course, they have different requirements and they have different regulatory pressure if they're out of Europe. Europe is definitely, let's say, the front runner when it comes to temporal and geographical correlation as requirement to green hydrogen production. And therefore, for hydrogen, we're only and exclusively looking at Europe, again, targeting these very large players that are interested in green hydrogen and are already large hydrogen producers.
Thank you very much for that answer. And we have another question for you here. Can the software of FlexiDAO be applied to the production of synthetic fuels using green H2?
Yeah, that's a good question. So far, we have been in the market for years. So far, we focus exclusively on the upstream part of any process that needs to consume electricity. So, for example, the electrification of heat, we're doing a big project in the Netherlands with an eco and with an industrial partner because they have installed a large e-boiler. So concept of electrifying first and then having to prove that. So always upstream part of any process. If then hydrogen, you want to use it for synthetic fuels, you can have the certificate that you can download from our platform and show to the customer that that green hydrogen was actually produced with renewable energy that was additional, that was local, and that was produced in real time. Of course, we are exploring whether our software can add value in the downstream part. There, it's a broader discussion because Europe is currently discussing and how the certification of hydrogen along the supply chain downstream will actually be performed and will actually be played out. So we are very careful and see how we can add value. If we see that we can, we'll definitely also move there.
Thank you very much for that answer. And our next question is for Karina. Does this only include OPEX or also the CAPEX needed to change to the new feedstock green H2?
Yeah, thank you for that question. I'm not fully sure if it refers to the green steel example that I gave earlier, but I think it does. So therefore, I will answer according to that. So yeah, the example I gave is if you change the process from like a standard blast furnace process to, let's say, a green hydrogen DRI-based process, you can produce green steel, so really lowering the emissions almost to zero. And this only costs you approximately, so like it really depends on where your location is. Are you in the north of Europe? Are you in the center? Are you in the south? What is your capacity factor, etc. But the overall, let's say, rough cost estimate is around €100 more per ton. And this actually includes OPEX and CAPEX. So this really includes, this is the full, let's say, premium that an end customer would have to pay for green steel. And we're currently exploring, and if there's people in the audience that are interested to understand more about this, please reach out to me. We're exploring, let's say, the other value chains, because the steel one is relatively clear, we think. But the other value chains where hydrogen can play a role, such as, for example, fertilizers or heavy goods vehicle trucking, also synthetic aviation fuels, so any kind of logistics, maritime fuels. We're evaluating those value chains, trying to really understand what is the premium if you co-create a business case together. And so please reach out to us if you have information or you want to share or you want to be part of it.
Thank you very much for that answer. And just another reminder to the attendees, you can still submit your questions through the Q&A widget. But moving on to our next question for today. Is there any governmental incentive at EU level to use green hydrogen instead of other kind of hydrogen?
Yeah, I think I will take that question as well, Simona, if that's okay. Yeah, so yes, a clear yes. Even though, let's say, the conditions are still being decided depending on which program you're looking at. But in general, there's, for example, the Innovation Fund. And to give you a little bit of ideas here, is Innovation Fund comes from the ETS system, so the emission trading system in Europe. where, you know, we have, let's say, a CO2 price, and emissions have a CO2 price and are emitted. And the Innovation Fund takes money from this, let's say, ETS system and reinvested in innovative technologies, and there hydrogen can be funded. And there has been like a call already for projects, and they have already been awarded as well, or at least pre-selected, let's say. And therefore, yes, there are, for example, the Innovation Fund, which are programs where both, let's say, blue and green hydrogen are funded today. And then you have also, let's say, some national programs, because we have a lot of, let's say, European directives that are then transposed to national law. And to give you an example, there is funding mechanisms linked to carbon differences. So that means that, for example, if you have a product that you're producing with green hydrogen and product that is more expensive, this delta can be paid through subsidies. And that is, for example, in Germany already under discussion and being implemented. Yeah, so there are quite a lot of funding schemes, and there will be even more in future.
Thank you very much for that answer, Karina. And I believe our next question is for you as well. Will the hydrogen be produced locally or at big centralized electrolysis stations? What utilization rate is projected?
Yeah, that's also an interesting question, because I think there will be a mix, in my opinion, but this is really personal opinion. So what we see today, we see a lot of announcement of gigascale, megawatt scale, so really large scale plants that go up to, let's say, 100, 200, 300 megawatts. Those are really, let's say, centralized productions. Production units that then will dispatch hydrogen through, for example, the pipelines or also to big producers. And then we see a lot of, let's say, also small scale developments. So we have like 1 to 20 megawatt, you could say, installation capacity. And I believe we will most likely start with the small ones, because, you know, there is a lot of, let's say, hurdles. There's also a lot of risk involved still with hydrogen projects. So most likely we'll start with a few small ones. And we'll also have, let's say, a few really big ones. And that will help us, on the one hand, to have local production with local demand as well, but also some big ones that can feed, for example, in the pipeline grid, in order to then really reduce the cost and scale down, let's say, scale up the technologies in order to bring down costs. And so I believe it's going to be a mix of both. And maybe to add to that, one more point is what you also see, that there is today a lot of, let's say, hydrogen production is targeted towards the existing production units, because already we're consuming hydrogen in Europe. For industrial processes. So often there are industrial hubs. For example, in the Netherlands, Rotterdam, you have a clear industrial hub. And there will be also, let's say, quite some, let's say, centralized production units in hubs, so industrial hubs. It's also all over Europe where it happens, let's say, decentralized and locally.
Thank you very much for that answer, Karina. And I'm afraid we have time for only one more question for today, which is regarding green steel. Don't you think that the end customer will be more and more willing to pay a premium for green, for example, for a premium green car?
Yeah, I think so. So there's really clear signs in the market, in the steel value chain. There's clear signs in the market that there is a need for green steel. And now it's all about what is the definition of green steel, because you know, this is a big question today on how do we in Europe, all over Europe, define green steel? Because, for example, you can recycle also scrap, so you can recycle steel and introduce scrap. Is that already green, or is that just recycled with some carbon footprint? So there's really questions around the definition of what is green steel. But I think in general, what we see in steel, that there is a demand in the market. And that demand is mainly driven from corporate CO2 emission strategies. So a lot of corporate companies now have strong ambitions to become, for example, climate neutral by 2040, 50, or have, let's say, 90% reduction by, or 80% reduction by 2030. So they're really driven by those reduction targets that they've announced to the financial community. And therefore we see that they will look at the quick fix solutions. One of which could, for example, be green steel, because as you saw earlier, it really decarbonized quite a big portion of the car manufacturer's carbon footprint. So yeah, I think for sure there is already a market today. So we see that the premium can already be passed on, and we believe that this will only increase in future.
Thank you very much. And just a reminder, if you did not get your questions answered today, make sure to attend the Business Booster in Berlin to meet firsthand with Karina and Simone and over 150 entrepreneurs leading the sustainable energy transition. Simply head over to tbb.innoenergy.com, go to the registration page and use the code TBB2021_BR15 as checkout. So that just leaves me to thank Karina and Simone for what was a great presentation, and to EIT InnoEnergy for sponsoring this session. To the attendees, you receive an email shortly telling you how to access the on-demand version of this webinar, or you can do this on our website, which is www.business-review-webinar.com. Thank you once again, and I hope you have a great day.